All right. Let's welcome Samuel Ayoub.
Thank you. Do I have to do anything to get my slides?
Yes, I'll go ahead and give you the multiple participants. Go ahead.
Good evening, everybody. My name is Samuel Ayoub, as Marie have mentioned, and I would like to spend the next uh, 45 minutes or so sharing with you some experience and knowledge, and hopefully that will have a positive impact. And some of that knowledge, you can use it either as an investor or if you're planning to become a syndicator yourself. I will also share with you some of the things I have found through my long trip in the business of syndication. All right, that being said, I have that little disclaimer, which I have always to share it, that I'm neither a lawyer or a CPA, so everything to do with taxes and real legal matters, you're better off, getting this information from a lawyer, preferably a securities lawyer. These are the type of lawyers who specialize in forming syndications. Of course, for tax purposes, your CPA will be the reference to go to. My experience with syndications, and as it is well published, that some of the syndications which goes, bad, there are major things which have contributed to that. And I advise that you will avoid it as much as possible. And the thing of it is, it's a human nature that everybody wants to take care of himself. So when you become a syndicator, you have unparalleled uh, authority sometimes to deal with money. So you have to be in a continuous uh, fight with the temptation of human greed. Anyways, this is my personal knowledge, and this is what I want to share with you as far as ethics. Generally speaking, just abide by the general ethics in dealing with other people's money. Okay. Uh, First and foremost, the speakers, we do not intend to sell you anything today. We're just sharing our knowledge and experience with you. And hopefully, we will continue having good networking together. For anything comes along, we will uh, share with you. Anyways, I start with a slide that life itself is full of syndications. I remember my syndication lawyer, I watched a video for him coming back from Chicago, and he was being interviewed, I think, on the local TV. And he said, well, life is full of syndications. Uh, the airplane ticket I have, it's a form of syndication with all other passengers. We are uh, hiring the airline company as a syndicator. We're both interested in their services. So there's a lot of things uh, can be called syndication. So sometimes you will be doing a syndication without knowing. This is my first syndication. I was told by my mentor, happened to be the husband of the lady who bought us our house, back in 1980 to go ahead and buy the apartment building next to the one they owned. And when I said, I really don't have money to buy these 16 units, he said, you don't have to have the money. You have co-workers, you have relatives, you can raise money. And he wrote me a limited partnership. And so I became the general partner. Oh, the first investment was very successful. I remember, we had a really good return in a little bit over a year, uh, 43% cash on cash, which was really good. Um, then I met somebody when, after I closed the escrow, I said, well, you've done very well in your first syndication, a syndication who? And then I understood that the fact of pulling funds together, buying an asset, manage it, disposing of it, is basically forming a syndication. Did not know that, and I'm happy to not get intimidated in the beginning, because if I knew that this is a syndication, I would have been uh, performing in a scared matter. Well, anyways, we'll move right ahead, and we want to make sure that your return on investment on your time in this webinar, myself and my colleague Steve Matley, that we will definitely do our best that you come out of this webinar and looking real happy that your return on this hour or two of your valuable time was really worthwhile. Let's structure our information like when we publish that we're going to be covering this material in this sequence, the concept of syndication, particularly syndications in real estate, which is the subject of this webinar. And what is the typical structure of a syndication? And we're going to have some emphasis how the people attending this webinar who are basically investors, how can they benefit from that? How you can evaluate when you have money, how you can evaluate syndicators. And some of them off the bat, either them or the investment, you know, may be eliminated. And if you have two good uh, investments and syndicators, how to evaluate them and select one. And also, we want to share with you what a typical syndicator charge. And we're going to talk very briefly about how to figure out your actual return on investment after you're paying the fees, which typically syndications and the people who form it charge. So be very careful of what your actual return on the investment. And it's also since the middle of 2019, I have noticed that the prices of apartment building, I'm an apartment building guy, is been really soaring. And remember, in real estate, all of you understand that, we always said that what sits the upper limit of the value of a piece of real estate is the replacement cost. So if you can build it new for less than $350,000 or even 400,000, which some of the units are being sold, might as well build it. I myself, I am type of person, since I'm dealing with people's money, unless I know something, I don't get involved. That is not an issue with somebody like Steve. He knows construction. I am very reluctant of getting my investors or the people who are following me into a construction project. And for syndicators, really, because the majority of the people talking to me says, well, I want to be a syndicator. So I want to really share with them how to be careful because syndications in general is regulated, heavily regulated by the Securities and Exchange Commission. And when somebody gets in trouble, they just don't go after him by themselves. They get the Department of Justice or the FBI, and really it has unpleasant consequences. I want you to be careful. And what can you charge, what you cannot charge. So to be careful about that, and as much as possible, avoid getting yourself any legal implications. That being said, what is the concept of syndication? Let's go back to the Webster definition of a syndication: a group of persons or concerns who combine to carry out a particular transaction or a project. Very generic, right? And it sounds like a unified goal. And my experience that investors who get into my syndications, understanding that they have a unified goal, it became very, very successful syndication. One of them, I don't really brag a lot about it because I knew the area, knew the building. Everybody was very supportive. We worked, and I limited the number of investors to very few. And we turned into the most successful thing I have ever done. And we, in 1 year, a little bit more, um, we returned 87% cash on cash. So I want you, when you pick up the team who is going to be doing the syndication, that you make them understand that you are all in it together and the goal is success. It's not a battle, it's not an argument, it's not a competition between the syndicator and the investors. You have a common goal. So the definition in real estate is any group investment. Remember what I told you about my limited partnership? It's a group investment. So what do the group investments look like? Corporations used to be done the syndication through corporations, limited partnership. Until now, it's one of my favorite formations or general partnerships. General partnerships have gone away now a lot. It was since 1986 when the Tax Reform Act came and limited the benefits for the limited partners. So everybody became a general partner. Long story short, that's for tax purposes. Um, Tenants in common, um, despite what kind of experience I personally have with it, it might be a good way which allows people to exchange in and out without forcing the whole partnership to sell out or being bought partially by a group of the partners. The most common format now is the LLC. LLC, Limited Liability Company. It is a corporation without the headache of a corporation, a lot of paperwork like a corporation. And basically, the LLC one is an entity where there is the manager or the management team, I prefer, and it is trending now that you will not find the LLC manager one person. It's a team of people who have the same vision, but they have different flavor of talents. And the other LLC, it owns the properties, and this is called LLC investment. All right, so this is a diagrammatic, you know, explanation that the LLC manager, which is comprised of the management team, uh, is dealing with LLC investment, where the investors and the money are kept. One good thing about syndications in real estate, it does not leave a lot of room for fraud. For those of you who watch American Greed on TV, I stay late and watch it. And, amazing bad things happen. The majority of that happens when investors are investing in stocks. So you cannot trace back which stock, how many was sold of this typical stock versus the other. But in real estate, you know if you own part of a an investment or syndication uh, called SamuelAyoub, bless his heart, uh, then you go to the county recorder's office and find that this property is under that name. So you know that you own 10%. There isn't really much room for fraud. Said Having said that, people find ways of getting themselves in trouble. That's the issue, anyways. Okay, I always, when I start talking about syndications, I emphasize to everybody, I only talk about syndications from the business side. I stay away as much as possible of the legal side. Even when I do consulting work, whatever I prepare, I advise everybody to take it and have their attorney review it. Anyways, so what is the functions of the manager LLC? It manages the fund, it manages the money, the properties, whether directly or hiring management company, manages the staff, whomever employed or independent contractors. It makes investment decisions, which properties to buy, which one within the portfolio, if they have a portfolio, to sell or refinance, when to distribute profits, and how much of reserves should be kept for rainy days, and which services should be contracted out, which services should be done in-house. Collects manager fees, and there is manager fees. Some people, in their mind, that comes number one. It's not. Uh, but manager has to eat once a while, so it is one of the functions of the manager LLC to collect the manager fees. And even though the majority of the syndications being happening now is under one or another of exemptions, but it's usually under one of the regulation. So you be careful that you just don't step out of bounds, because you stay within the regulation. I haven't seen the government issuing anything which is regulation free. That's their job, anyways. Um, and it oversees the accounting and the reporting. Very, very important that the investor will know where is their money, what their money being used for, and secretive behavior from the LLC management team generates unrest and uh, worries. So I always take time, even way back in 1984, 85, when they have the dot matrix printer. I used to print reports, detailed reports, and this thing is just going slowly. But it's very important that you make sure that you're communicating with your investors. And what about the investment LLC? By the way, for those of you whether on the investor side or syndicator side, by the way, syndicator in the legal language called sponsor. So when things start, you open two separate bank accounts. I'm saying it slowly. Two separate bank accounts, no mingling between these two accounts. One of them is for the investment LLC, and that's where the funds, where the money goes, does not go to your account. You can get refunded by the operating agreement terms and conditions, but you don't refund yourself just whenever you feel like it. And the second thing, it holds title to the assets. Thank God, right? Thank God that this is done so people will know where the assets are. And also it distributes funds to the investors. When the LLC manager decides to distribute funds to investors, that LLC does that with directions from the LLC manager. And it pays fees to the manager, and it issues quarterly reports, at least quarterly reports. It depends on the operating agreement. I usually do it monthly. It's headache, but it's very, very important to keep them informed. So one of the benefits for the investors, why would they take their money and put it in a syndication? Why don't they just invest it themselves? The power of syndication is the little guy or the little girl uh, can use her smaller funds when it's pulled together. It gives a power in deal negotiations. And also, since it is done by professional, people are doing that for a while, it does have a good in investment evaluations because it's fairly objective. No emotional, I'm going to buy this, it's too far from my house, and all that stuff. So it's more objective. It is, and number three, just think of a doctor who wants to do property management. Rather invest. My first investment was a 16 units, as I mentioned, was owned by a doctor. He gave it to a management company. So my emphasis, and you will see, I will be talking, and emphasizing management. So when I bought it, when I told my partners at the time, I'm going to enhance the management, and everybody laughed at the time because it was running with an operating expense ratio of 56%. That's miserably bad. Uh, and we ended up running it. I was not getting paid for management 5-6%. I had to prove myself, but was able to run it for 28%. Anyways, management is a headache, but it can make it or break it. And with the proper asset management and property management, you can depend on that even when you grow older as a dependable source of income. And the homework, which is a due diligence, is done by professionals. People have done that for a living for a long time. And of course, diversification. If you join a big syndicator that you know and trust, you will find that they diversify the ownership of their portfolio between different markets. Some markets are cash flowing very well, some markets are not, but they are building equity. So you will benefit from this diversification. And the stability of value is a subpart of number six. And it's potential tax optimization because they optimize their moves in exercising the exchanges. And if they hold the title properly, then you can benefit very well from the advices available to them and their exchange methods. Okay, uh, how investors will eliminate, evaluate syndicators. Uh, First of all, you look at the investment. If it doesn't work on paper, and the majority of you, just introduce yourself, you have background in real estate. So you look at the investment, it's a go or no go. If numbers don't work on paper, it's not going to work in real life. The next, you look at the syndicator. If it is, I hate to tell you, my dear audience, if it is the first deal for the person, it is a flag. I cannot really say that it should be a flag, but usually lawyers, they would tell you it's a flag because it's the first. They advise rookies or the first syndication not to quit their daytime job. For me, my first was not bad, 43%. So I cannot say that should turn you off, particularly if it's a relative or a good friend. Prior performance. What have you done, Mr. Syndicator? Who is going to take my money? What kind of returns you have? Do you have success uh, in putting together syndications? And if you have one failure, what was the reason? And it's a plus when you look at the LLC manager, the syndication, and find it's a team. This is a plus. And how do they structure their syndications? I'm going to show you on the next slide something which I have lived through it. And it was my first time accepting a 1031 exchange. And if it is not put together well, I will just show you, what can happen. And the size of the investment. If the size of the investment, you're going to put 300, 500, or a million out of your 2 million or 200,000, big chunk of money, it may worth showing the agreement to your attorney. Of course, that can be a deal breaker because attorneys are going to start modifying things, and the syndicator will not be welcome a lot of modifications or any modifications to their standard agreement. And how to figure out the ROI after the fees? A lot of syndicators take upfront fees, percentage of ownership, without putting money in. And also, they ask for some companies to help them raise money, crowdfunding, and so forth. So, is the return on the investment on your initial money you contributed, or the amount of money that reached the hand of the syndicator? Very different. So you need to look at the analysis and figure out how much money is the return on investment. Definitely, or the majority, dominant majority of the times, it is on whatever you invested in. It's not your fault that the syndicator have used the services of somebody. Here on this um, slide, I just want to share with you what happened when the syndicator accepts a 1031 exchange money. Okay, here is the property. And the syndicator or the sponsor had investors thinking of having them all as limited partners or silent partners. The IRS tells this guy with a 1031 exchange, you have to own a property. You cannot own a piece of limited partnership. You are moving like to like from a property to a property. So what happened? that this particular one becomes a tenant in common with the syndicator. So you knew the syndicator, you knew his prior performance, but who is this guy who came from a 1031 exchange and all of a sudden have equal power to the syndicator? The IRS finally in 2002 came up with a revenue ruling to correct this, or try to correct, let me put it this way, this dilemma by having a revenue ruling 2002-22, which allows people who are really stopping the sale, because everybody has to sign, their name is on the title separately. So it has to be unanimous. You can force them, but you have to have what is called the call option. I don't want to get things complicated, but check with the syndicator before you get in if he takes a 1031 funds, and if so, how does he make sure that the deal will not be stopped by his tenants in coming from 1031 exchange? Okay, what's typical syndicators charge? Acquisition or disposition fee is just like commissions going in, coming out. And also, there is a survey done by the CCIM. The CCIM is the commercial arm of National Association of Realtors. A survey that investors or syndicators uh, like to take between 10 and 17, sometimes 20%, but an average of 15%. So will not be surprised when you see the syndicator is taking a 10% ownership. What else? Asset management fee, that's not property management, is managing the investment, the headache of dealing with service providers, lawyers, investors themselves, investor relations. And there is a question always. The lawyers will tell you to be conservative. As a syndicator, always share the cash flow with your investor to be safe. Because some syndicators, they charge a percentage of the asset value, a 1%. A property is worth $1 million, $10 million. They would charge a 1%, $100,000 a year. The one bad thing about that, if the performance is going bad and the syndicator is still collecting, this does not look good when the investors goes under and the investment goes under, because it sounds like he is collecting his fees regardless. But there are trade-offs. I tell you, I will be surprised if people in construction would just share the cash flow, because until the thing is constructed, until the cash flow start coming, they have one way or another of getting paid. Share the part of the cash flow or the profit at the end, and uh, all things have to be motivating the syndicator to make the right decision. So if the right decision is not to sell one of the assets, it's just to refinance it. But you wouldn't get paid if there is no refinance charges. So you will see that when they refinance, the majority of the agreements call that they get paid. Number six is very, very important. I have not done it myself, but I should have. For that investment of 87%, any other syndicator, people, big companies, what they do, they said you've accepted the projections between 20 to 25%. I got you 85%, let's say. So it is 50% more. So I exceeded the expectation let's say by 50%. What we're going to do is that we split it 25 to the investor, 25 to the syndicator. This is very common. And you want the syndicator to exceed the expectation. Anyways, this diagram, until I start really talking about the benefits of construction, did not have this arrow. It's basically, this is what the syndication or the group investment should have. They should have somebody with analytical mind, somebody with good management skills, somebody with rehabilitation or now construction abilities, and the capital where it comes from the investors. So they go after an opportunity. In my examples before, not just a piece of land, was a building, apartment building going south. So through these four elements, you convert a non-performing asset to a performing asset. The result will be what? Instead of running negative cash flow, it will start running positive cash flow and the value will start being increasing. The majority of the syndicators will distribute the cash, and that is that uh, element or segment A. And as the value goes up through the years, this equity built up is only realized when the investment is exited, so sold. So the return on the investment is A plus B. Okay, all right. So for syndicators or people who are planning to become a syndicator, if it is your first, consider joining as an investor and learn in the first one. Be very observative of how the expert syndicator is running their syndication. You say, but you know what? I have my cousins and my friends. I raised $2 million. How would I just be an investor? I need to be compensated. Talk to the syndicator if he needs that $2 million. He will put you in the LLC manager because you, as I mentioned, you have shown ability to raise money. He needs somebody, they call them enhancers. Uh, so they may add you as part of the team on the LLC manager, and you get exempt. You get the exemption from the regulations, and you can get paid when the LLC manager get paid. It depends. If they assign you for fundraising, he will give you 10%, 15%, but you will observe how it is being run, and then you start forming yours. All right. All right. Take enough time to do the business case, the business plan. When you take it to an attorney, attorneys know legal stuff, but you're the most knowledgeable about what you're going to do with your business. You're the business person. So the thing of it is, if you're going to take a draft uh, to your attorney and say, I want to do this syndication, but you're not clear, you're going to end up being charged a lot of money at the attorney's rate. And the end result of the agreement might not fit what you want. I recommend that people learn to read even the legal documents because what happens to these legal documents? People don't look at it until problems happen. And when somebody tells you that no, we write the agreement in expectation of success, that's not true. So long as the investment is doing very well, nobody really looks at this agreement. Make sure that everything you want to be achieved is in that agreement when you hand it to the attorney is only to put the legal framework in it, right? What else? All right. Be clear with your potential investors that you have exit strategies. We're going to look at the market after 3 years or 5 years, and if the market conditions are suitable, we will exit. Be very, very careful. IRS can look at this agreement, and if you would say, I am buying this property to sell it after a year or two, they will just simply tell you you are warehousing the property, you're not holding the property for investment. What that can do for the investment, they may not allow you to use the depreciation and they may not allow you to do the exchange. So always the phrasing of the exit strategies. We will look at the market, and if it is suitable, we will evaluate our option. People will understand that there is a possibility after 3 years or 5 years, or you say the term of this agreement is 5 years, but avoid saying that we are buying in order to sell. All right. Uh, Include in your team enhancers. I tell you, sometimes people who are very, very smart and don't have money on the LLC manager, it might help that you know somebody who has got money and not only wants to have return on their investment, but their financial statement is beautiful. So if they are on the LLC manager, they definitely enhance the chances of getting loans and so forth. All right, property management. I've been known about very vulgar with property management. Uh, so I do recommend, without just talking a lot of negatives here, I recommend that you may have either an in-house team if you have a relatively big property, or you have somebody very knowledgeable about property management. He would coordinate or watch over how the management company are performing. And remember, for those who attended my classes, management company, yourself, anybody in the bank expects that the operating expenses is 35%. Anything over that, there's something is not right, particularly if it remains for a while. Anyways, so management, management, management. The next thing, stay away from paying real estate referral fees. You know what happens, even though you are working under one of the exemptions or different, uh, like the majority of this regulation uh, D, whatever under the exemption, you still, and it continues to say, no part of this can be sold, mortgaged, or sold. So you don't want to be accused of selling securities. Anyways, check what I'm saying with an attorney. Don't take my words because we're getting into the legal borderline, can or cannot. Uh, Also, when you use in your marketing material some committal language such as we promise 25%, we got, this language can come back and haunt you. We project, and even they found out the apartment association will tell you when you advertise for an apartment building, security, not access control. Successfully, tenants have sued and won because the use of the word security. So generally speaking, don't have a very committal language. All right, because I know the majority of the audience here, they are interested of being, syndicators. So maintain good communications with your investors. I always do. Sometimes they tell me, you just say more than what you're supposed to. So long as you do not, when you have bad news, do not cause panic. Because once people panic, it's just like the stock market, when it is crashing, it's basically things were just going moderately bad, but when panic happens. So when you have bad news, you disclose what's happening. Don't cause panic. And also when you overperform, like one of the quarters, and you know that from this point on, you're not going to be distributing 10%, you know you're going to be distributing 20%. So stay away from raising the expectations too much because people will say, that's why I told you, I don't really tell investors when I am doing a syndication about the 87%, because if they get 35, they will say, what happened to the 87%? So don't raise the expectations too much and avoid the expectation of double dipping. True that you are entitled by the agreement to collect acquisition fee. Now, let's look at an example. If you have a cash reserve, or when you started, you have a $600,000 reserve. You got paid 3% because you're licensed. You are also a syndicator. You got, for the $12 million, you got $360,000. You are entitled to charge also another 3%. My recommendations don't. Even just for now, don't take it until the investment is successful. Just inform them that you're suspending that. What happens if that cash reserve get diluted because of you look like you're double dipping and the cash reserve disappears? The investment goes bad and you go in front of a judge. And this poor investor who is crying, Your Honor, you know, this syndicator is greedy. And look, at the time he's got the 360,000, he was not merciful of taking the 360. Is your right, but just be careful. Don't give the impression of you're double dipping. All right. They used to tell us back then, 1985, when I had a manual full of paper about the syndication manual, the catch 22. You like a piece of property, you really want to have investors because really the return on the investment is so beautiful. But at the same time, you go try to get the investors and you wait for long after you talk to them, a couple of them committed, and the rest of the six people, let me think about it. So it's gone. So here comes the skills of tying the property in escrow for an option money. And usually 90 days or more, that allows you to talk to the people, continue your dialogue with interested people. So when you show them that now here it is, and even better than what I described. So this is one of the things you worry about. And the solution is not 100%, but doing an option on the property for long escrow is one. More advice is what do you want to advise from me? Fight the greed. Fight the greed. You know, some of the things which went south when I was watching this American greed thing, Sometimes even though it starts with a scam, and God gave that syndicator an opportunity, money started coming a lot, and he had a chance to correct and go in an honest way. But because of the greed, he really couldn't do away with a paper holder of 18 carat, whatever, and two private planes. The human nature and the greed is something when the money is all in your hand, fight it. If you have to pick another one, don't be an island like I was. I mentioned to you the word I. I hate to do that many times. When it came to a certain stage, I looked around because I was always working by myself. When you start, don't be an island like I was. Form a team of working partners with different uh, spectrum of knowledge and capabilities. Okay, the government laws. I want you to educate yourself. Uh, Follow social media for syndication attorneys. You're going to have a lot to learn for free. And if you have to spend a few dollars, you may have to, optimize your learning money. One of the things which is coming and you need to know and just recently have changed the Jobs Act. The Jobs Act started way back in 2012. It's been modified in 20, I think, 16, 17, 19, and 20 now. The Jobs Act or the crowdfunding have increased substantially. You can use these skills. And like I mentioned, when you're working with an exemption, uh, then just don't invite the Securities and Exchange to your business practices. It has serious. Work with an attorney, not just any attorney. I remember years ago there was a commercial for Valvoline motor oil, and the joke and the punchline was motor oil is motor oil. I don't know how many people are old enough to remember that. A lawyer is not a lawyer is not a lawyer. A lawyer in syndications tell me about that, and I promise you in the beginning I'll avoid sad stories. So when you ready to go, pick a securities attorney to review your document, not just any attorney. I remember what Sam said, motor oil is not motor oil. Maybe Valvoline is superior or, lawyer is not just a lawyer. Okay, is it time for multifamily construction in Southern California? In real estate, we used to say what sets the upper limit of the value is the replacement cost. Now, replacement cost has been reached and may be exceeded. So, construction is a good approach. And I'm not saying that because the next speaker will be in the business of construction. And also look at the properties, anything which is older than 15 years or whatever number of years the government may come up with is subject to rent control or subject to exemptions. But these exemptions for new or newer properties is a benefit. And the risk versus the return, particularly when you're dealing with a fairly large syndications, uh, and a knowledgeable uh, developer who they would identify the right market and the right sub-market is a plus. So what is next, my friends? I am always now approaching 55 minutes. It's clicking in front of me. We hope that we will stay in contact. Um, Anything which we can network, we can share knowledge, we can share experience, we can share business. we will do. The material here does not have any illustrative examples. Usually I do that in 4 hours. So if it comes in 4 hours, I will let you know. And also we will keep you informed of anything new, anything comes which looks like a good investment or looks like a good deal. Thank you very, very much. You've been a great audience.